Hello viewers, this is Saurabh from Tax Accountant and this is August 2026, and what I looked at, what would be the tax deductions that some businesses might be missing in today's date onwards. So historical, forget about it, but what are the new rules today that if you're missing something or not? I made a small video. Please watch it so that you know what kind of expenses could be out there that we are missing. So these are the 8 things that I have found, and if you do have something else, you can put into comment box and do let us know if we have missed something. So these are the real commercial situation, right? I'll put it into 3 categories. One is the cash flow category, one is asset plus GST category, one is people plus private use category. But don't get confused with these categories. Look at first thing first. Do you know the tax department also pay you interest? Yes, they do pay you interest if they use your money. So if you do pay your tax early, you can get roughly 4.25% interest back to you. Don't quote me on interest because it's keep changing depending on the time, the payment, number of days and stuff. But point is, if you pay your tax early and if they use your money, yes, you can get money coming back to you as well. Do you know that employee gift up to $300 per quarter is actually a tax-free income for your employee? That is correct. $1,200 a year you can pay that employee, and it is a tax-free income for them. It's mainly designed for discounted goods, a discounted transport and stuff like that. This is designed mainly for that, and it's mainly designed if employee is leaving and some gift card is provided to a client of worth about $200, so client the employee don't have to pay tax on that income, and the cap is $22,500 per employer annual limit, so that it's not misused by large companies. FBT and personal use adjustment. So one vehicle, 2 tax path. If you're a small company, you can go to FBT route, which is file and calculate fringe benefit tax on private availability, or you can opt out from there and you can do income tax and GST private use adjustment instead. So only 1 to 2 vehicle, no other fringe benefit. So it's mainly available to shareholder employees where only 1 or 2 vehicles are there. They can go to private use adjustment model as opposed to FBT model. So this is a good use. Yes, you can use it. If you buy something from a private seller of $23,000, there is a potential GST credit of $3,000. If you do not have an invoice, you can't claim it. It's gone, finish. But if it's second-hand goods and you are in taxable activity, you are doing a business, it is not a related party transaction, and if you have a proper record, supplier, date, description, quantity and price, you have already made that payment and all other eligibility of second-hand goods criteria meet, yes, you can claim the $3,000 as a tax credit to your potential GST refund. If your asset is worth $1,000 and below, you do not have to depreciate it. You can expense it straight away. So that becomes your expenditure on day one. You don't have to go through the depreciation schedule. Look at that. It's pretty relevant, and I often see that's been missed by many other businesses. Investment boost 20%. This is fairly a new scheme. We have seen that's been missed by many businesses as well. So if you do buy worth something up to $10,000 excluding GST, it's gone. Like this is excluding GST. Of that, 2,000 would be your expense straight away, which is a 20% reduction. Now this does not depend what time of the year you buy. Even you purchase that on 29th of March and year is ending on 31st of March, yes, you can claim that 20% straight away deduction. Could be used for tax planning as well. You can use it to purchase just before the end of the year, and then could be as much as $1 million. There is no cap on that. If you do buy it, you do get 20% deduction straight away, and balance 80% goes into depreciation schedule. If your employees are working from home, there are some benefits to be given to them. Tax-free income can be provided to them. Examples are already there. Calculation methods are already there. This depends on number of weeks they have worked. You can pay certain income to them, and that becomes a tax-free income for them. So this is pretty handy for those people working from home. They can be reimbursed for use of their power, water, and stuff like that. So this is important, and business get tax deduction anyway of that. This is mainly $4,000 rule that can be used to opt out, and this is mainly available if you have any holiday homes and stuff where some adjustments are to be done. A qualifying owner can choose to leave the assets, income, and expense out of both income tax and GST returns. It does not apply to company owned holiday homes. So do look at that rule as well. That is quite important. So from all these items, you're basically looking at whether you're buying an equipment or a vehicle, you're employing or rewarding staff, you're running a closed company, you're newly self-employed, you're renting a holiday home, boat. So all these mixed use, asset, repayment, FPT, opt-out, working from home, reimbursement, secondhand goods, investment boost. So these things will be handy for you. So these rules, mainly what you need to do, you need to look at, identify the rule, test the eligibility, document the decision, and claim it right away. If you can do these things, it will be helpful for you. Any question, you can always reach out to us, do your own research, or ask your advisor for that. We are here to help you. If you need any help, contact us. Thank you for watching this video.